Hello, hello, hello. Mic check, check. 1, 2. Should be able to see me. We're gonna begin in 1 minute and 14 seconds. Great, you can see me. Perfect. So we're gonna begin in about 35 seconds. All right, welcome to Trade with UFOs Head Start, which is your group coaching in terms of trading and psychology. Before we begin, please make sure to read the following disclaimer up here from above. The following videos, clips, demonstrations are for educational and instructional purposes only. Traddictiv provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree the hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. My name is Reynaldo, and you can email me at reynaldo@traddictiv.com. And also, please make sure to visit our other channels as we have different classes in stocks, forex, futures, and options. So please make sure to visit those as well, and that would be very beneficial for you. So for today, what we're going to do is simply discuss how you would be able to eliminate fear when trading. So if that's basically how you experienced in terms of the way how you traded this week, we're going to discuss that as well a little bit more. And at the same time, if you have any questions or challenges, please feel free to type it in terms of the chat on here on YouTube. So based on the live chat, and we're more than happy to answer your questions. So if you're new to this, which I'm also new to actually the channel, basically on YouTube. So I've been trading since 1996. I went live in 2003, mainly. Not when I say live, basically went full-time, trading full-time in 2002, sorry. And so basically for the past 18 years, I've been trading professionally. Been teaching for the past, since 2003, so 17 years actually. 17 years, and which I find that in terms of success, I'm not here to or claim that I made a lot of money in terms of trading, but mainly I'm here to assist you and help you based on my experiences, mainly my downs rather than ups. And basically through there, I also got my certification in neurolinguistic programming. So as my journey to trading, to knowing in regards to what are my limitations in terms of whatever results I may have had basically in the past. The question now is, how can I be a better trader? So if I'm going to give you in terms of my experience, it is mainly about the 6 inches between our ears. What causes in order for us to have negative results? What causes for us to have negative emotions such as fear, such as greed, such as regret. What causes in order for us to micromanage our accounts? What causes for us to act impulsively when trading, getting into the trade, chasing price? Why do we micromanage the account? Is it because of fear? Is it because of um, the anxiety that we have? Is it because of what we believe in when it comes to money? So was it really? Why do we act a certain way? So at the end of the day, what I found is simply it is our beliefs that creates either a limitation in terms of our successes, or maybe a self-sabotaging mechanism. And these beliefs has been stemmed in us since childhood or since even birth. So the question is, how can we change those internal limiting beliefs that will support us in regards to our consistency when it comes to trading? Well, there is a process in order for us to do that. And mind you, 5% is being utilized based on our conscious mind, and 95% is based on our subconscious mind that is being instilled in us since birth. And by the time, according to Dr. Joe Dispenza, who is a neuroscientist, and according to his research, stated that approximately around the age of 35, that whatever beliefs or whatever the habitual practices that that you have done, whatever truths, whatever you have made up in terms of what is true to you by the age of 35, shapes you of who you are as an individual. Basically your personality, basically your persona, or being you as an individual. And out of that, positively or negatively, that basically stems inside of you that will result to your day-to-day personal reality. So this way, if you want to change whatever results that you may have, then you have to change your own personality. All right, so that being said, let me go through here and open up basically a chart. Okay, should be able to see that right now. So here's a chart of the Euro US dollar based on a 4-hourly time frame. So one of the biggest in terms of a challenge that every trader will face is the uncertainty of events, or what's really happening through here, which is basically the future. So if the future is something that doesn't exist, so here it is where the future is unknown, and this is where every trader will forecast where the direction of price is going to go. And when there is uncertainty, there is always going to be fear. The question is, what is fear? Fear is what we call false evidence appearing real, something that doesn't exist, something that is a made up thing. It is a story. It is a narrative that you and I will always create. Is fear good for you? Absolutely, because fear will protect you. It will protect you, for example, if you're walking in a dark alley, your intuition that is now based on fear-based will tell you not to go there because there's some form of danger. So when there's fear, there is what we call a fight or flight response. So either you're going to fight it, that if you're in danger, you're going to fight, or you're going to run to fly away from the incident, or you're going to hide, which you're going to just sit down and duck or not do anything. So traders who are in this emotional state of fear-based will either fight it. So in other words, if you know and you're uncertain and you're analyzing it and you have the pieces of information, you have the data, in place, then you're going to place the trade based on the analysis that you have set for yourself. However, if there is any form of negative thought, any form of uncertainty, there's also that option of you not placing the trade. So in other words, you are going to step away with it and not trade. And the other one is simply hiding or not being responsible. So when does that happen? That happens when you say entered here at the highest price, say approximately say 122.60, and currently now the price is at 122.50, 122.44.9, and you're now 10 pips below from the entry point. And in that essence, if you're not being responsible with your trade and say, for example, that the maximum the amount of pips that you're willing to risk is 10 pips, and it went below 10 pips, and you're not being responsible based on your trade, and you're going to step away and basically hide and not take full responsibility. So that is the third option, or the third category when it comes to fear. So this week alone, in terms of in class, I'll just share something with you. In this segment right here, it was basically Wednesday. There was a FOMC meeting minutes. So at one point, the price was dropping, and it was very, very bearish all the way down from the opening price here at 121.68.8, and then dropped down to 121.25. So that's approximately 43 pips to the downside, with a normal standard lot that's $430 US. For a mini lot, that's $43, and for a micro account, that is $4.30. So depending on, of course, it's all relative. If I'm gonna, just to make it easier, a normal standard account, you're down $430 at one point. So we basically were analyzing, and we stated that, okay, it is approaching an area of demand. So the question now is, what are you going to do? Are you going to buy, are you going to sell, or are you not going to do anything? And the majority simply was frozen in terms of the act of what they're going to do. Whilst when price is actually dropping and there is a lot of fear in the marketplace, it is also one's opportunity for another person to make money. So if you're a contrarian, or if you're a supply and demand trader, if you know price properly, that when price is dropping and price is a level of demand in an uptrend, then the rule, or very, very simply put, the rule is to basically buy, because you're at the lowest risk with the highest probability of winning. However, when you're in that moment, on the other hand, when something is dropping, in most cases, when you are being set in regards to the lack of awareness, and your conscious mind is controlling the subconscious, and that you're in a state of fear which is now controlling you, and you're no longer being objective when you're looking at the markets within that moment, then it becomes more challenging to react within that moment. So the key to eliminate fear is to be mindful and to always be aware with the plan that you have set for yourself. If you do not have a plan, and you do not have a goal, and you have the lack of awareness, then it's going to be a challenge for you to trade. It doesn't matter if you're trading a 1 minute time frame or all the way to a monthly time frame. Of course, the shorter the time frame, it is more challenging to have the ability to react faster when your ego or fear or any form of negative emotion is controlling you. At least, but if the difference with a 1 minute time frame and a daily time frame is simply that when you're trading on a 1 minute time frame, you have 60 seconds to react fully based on that. On a daily time frame, you have 24 hours to react, meaning you have 24 hours to create different strategies. You have 24 hours to make a decision, and basically from that decision making process is to make a choice. So to make it easier, decision in Latin, it means decidere. Decidere means to create reasons why not to. So part of the decision-making process is actually using our analytical mind. Analytical mind, which is the use of our logic. And if you're going to split basically your brain into two, it is mainly you using the left side of the brain, which is your analytical mind, your logical mind. And then the right side of the brain is mainly your intuitive side, your creative side, your artistic side. So it is the balance of utilizing both part of the brain when we're trading. So before trading, we have to use the analytical mind to create logic, to create a decision-making process, whether we're going to buy or we're going to sell, or we're not going to do anything, either to fight, to fly, or to hide. So basically those are the three things based on the uncertainty of the unknown. And if you can define objectively what technical analysis is, and if it is defined objectively that it is the study of price action or price movement to forecast future price action or future price movement using present and past price action and price movement, and if you can define that properly and you can fully understand that, and that if you as a trader is simply a technical analyst utilizing whatever tools that you may have, utilizing the apps that traddictiv basically, or what we use using a tradewithufos, trading climate, which is an added tool set for you to identify buying and selling entries, then that is part of your decision making process to choose whether if you're going to buy or sell or not do anything. But the bottom line is that if you want to make money, holding is not an option. So if you want to make money, either you buy or you sell. But to do that, you need values and principles within oneself. So the decision-making process will create a personal choice to simply either you buy or you sell. That's it. That is the bottom line. You cannot do anything, because you're not going to do anything, then you're not going to make any money, because at the end of the day, what is the purpose of trading? The purpose of trading at the bottom line is to make money consistently. Can you win all the time? Can we win all the time? No. However, the key is simply also about the risk management and money management during trading, and that is where the challenge lies, is simply on the during part. So once you have made a choice, you have a 50-50 probability, either you win or you lose. So that creates, from the personal choice, creates the result for you to make money or to lose money. And mind you, what we're discussing here is simply the process that in most cases people do not realize, that people do not understand, mainly novice traders and even intermediate traders, even actually advanced traders, because we, as long as we as humans will have an emotion, then we're always going to make mistakes, because there's no such thing as perfectionism. Unless, of course, that if your trading system is fully systemized, basically mechanically, but at the end of the day, you still have to press that button. You still have to make the decision whether you're going to press the button or not, or if your system is going to let it basically ride 24 hours, 5 to 7 days a week, then that's a different story. However, if you're still doing trading manually, regardless whether you're using an AI or an EA or mechanically, and you have an emotion, every person will micromanage basically their account, or will touch that account, or will sit on the sidelines. Why? Because of emotion. And as long as there's the unknown, in which is the uncertainty of events, then you're going to experience still simply these negative states of uncertainty, which is basically the fear-based emotion. So that being said, what happens now during trading? So once you have decided either to buy, or based on your analytical mind, based on the logic that you have created for yourself, then you have to make a choice to buy or sell. And then simply through the waiting game. So what also makes it challenging is simply during trading. So during trading, you're simply using now your intuitive process to really dictate, and you're using part of your intuitive process is using your own values and principles as an individual. So what are values or principles? Values or principles are something that is holding you accountable based on whatever belief systems that you may have. For example, it takes discipline to follow a plan. So if you have a trading plan, and say, for argument's sake, that I'll just take this example. If the plan is to buy at demand in an uptrend and you hesitated, then that is now based on fear-based. Then you're no longer in a value of courage, because to follow one's plan, you need to have courage. To have courage, simply you also need to have confidence that you can trust yourself, that you will follow the plan. And when the opportunity comes and you didn't execute, the question is why? Why didn't you execute? Are you afraid of now losing? Is it now fear-based? Are you now uncertain based on the analysis that you have created for yourself? When you have all this sense of negative feelings, then it's no longer your own set of values of your true self that is now controlling what's supposed to be done when you're trading. If that makes sense. Because if you're now trading based on fear, then you're sitting on the sidelines, because now what are you protecting? You're protecting yourself simply from making money. The limitation in terms of the success that you have, that you already set for yourself in terms of your purpose as a trader. In trading, unfortunately, you need to take risks. Calculated risks, in order for you to make money. So the value of acceptance, the value of honesty to accept, the value of courage to have the confidence and trust that you could be honest enough to accept the risk, that there is a probability that you may lose. However, the future becomes more bright is when you fully accept in terms of the amount of risk that you're willing to take. That if, say, for argument's sake, just right now, that when price is currently now dropping, and price is now at a level, say, at demand somewhere here. So I'll just give you a hypothetical example here. Mind you, this video is definitely just for demonstrational purposes only, not here to give you any form of advice, but just to give you some examples and hypothetical examples that basically proves our claim or proves our theory. All right, so that being said, if price is here and price is, say, at the current of the demand, and it's saying for us to basically buy at this point in time. Now, what will be the risk? Well, the risk will be simply this: if we're getting at 122.36 and say the current low is at 122.28, that is simply an 8 pip stop loss. Now, if you're trading that on a standard lot, 8 pip stop loss and $80 to gain, say, $80 to the upside. So if we're getting at 122.36 plus 8, then 122.46 will be the target point. All right. So that's a 1-to-1 risk to reward ratio. Price can only go in two different directions. Either it will go to your stop loss or it will go to your target point. That's basically it. But if once you have, say, created the probability, and say the probability is that it's going to go 80% to your target point. So you have a 20% probability that will go to your stop loss point. So the question is, are you okay to risk $80 if it goes and if that has the probability it will go to your stop loss point, which is 8 pips below that? If you say yes, then you place that trade. Now you are in a value of acceptance that there is the probability that you're going to lose that $80. On the other hand, sometimes that if we are not aware of our own internal thoughts on a subconscious level, we may say yes, but deep down inside, we're not really truly honest that we can really risk $80. So if that would be the case, then why press the trigger? Then why basically say yes? It is because of the lack of awareness of what we don't know that we don't know on a subconscious level. Now, if you're truly honest within oneself and you truly are accepting, then if you lost $80, then there shouldn't have any form of negative emotion, such as regret, such as irritation, such as frustration, such as sadness, or anything that leads to the dwelling, blaming oneself that the shoulds, the coulds, the woulds. If only I didn't place the trade, then I would have lost $80, within that moment. So that is where, in most cases, the problems that we do face as traders. But once you have a clear indication on a subconscious level, the awareness, then negative emotion will basically disappear. Fear will disappear. Fear normally just happens based on a past experience that's been happening basically a lot in the past. I mean, you lost a lot of losses in the past and you keep losing and losing and losing. That's why the next time you're going to place a trade, you're going to hesitate. And then through there, the part of the hesitation, analysis paralysis will actually happen. So when you're in that state and you're not fully aware of those internal subconscious limiting beliefs, you will have this problem basically on the day-to-day level. It has been proven that we have 60 to 70,000 thoughts on a daily basis. And 95% of the 60,000 to 70,000 thoughts is the same thoughts on the previous day. Mind you, if you're more than 35 years old, then you already have been rewired of the habitual practices that you've been doing for the past X amount of years, or depending on how old you are, based on a minimum of 35 years old. Now, if you're below 35 years old and you're watching this video, then you have basically a chance to change whatever that needs to be changed. On the other hand, if you're above 35, can you also change? The answer is you can. You can change, but it takes time in order for you to change that habit. In actual fact, it takes a minimum of 21 days, according to a university in New Zealand, to change habitual practice. Actually takes 21 days in a row. So when you are in a state of fear within that moment, so here's now the key, is simply that to interrupt basically that thought process, to acknowledge that thought, that when you're in that fear, it's like, okay, I am afraid right now of placing a trade. Now, if you are simply confident with the system that you're using, and you know that you can make money and based on that probability, and you accept also that there's also a probability that losing is part of the game, and that you will also have that probability that you may lose, and you're okay to risk it, then interrupt that thought of fear and basically just place that trade. And then by you keep on doing that, and you are accepting that learning or losing is part of learning. And if you're a novice and you're also an intermediate and you're new to the trading game, then I highly recommend to have that mindset that having mistakes is an integral part of the learning process. I'll say that again, that making mistakes or losing money is an integral part of the of the learning process. Unfortunately, a lot of people will always have the expectation that they can make a lot of money at the very beginning, or in general. Trading is, I'm not gonna lie, trading is perhaps one of the most challenging professions there is. It is difficult, and it is a learning process where traders will actually experience this. If you've lasted more than 3 months, congratulations. If you've lasted more than 3 years, and you have come along this way, then definitely you'll have the persistence. You have that persistency, then the probability that you'll be more consistent or you will last long in this business is highly probable. Why? Because 3 years on that is the average amount of years where people will either give up or will keep going. For me, I find trading is very similar to martial arts. I've been doing Taekwondo now for the past 38 years, and Brazilian Jiu-Jitsu for the past 12 years. For me, I find trading very similar to both, but mainly more of the Brazilian Jiu-Jitsu. I say that because everything is all a mind game. It's all a mental game. In Brazilian Jiu-Jitsu, you cannot fight someone who is bigger than you, or you cannot bench press. So, for example, I'm 150 pounds, I'm 5'9", 150 pounds, and on average, the people that I spar with, or I roll with, or I grapple with, they're on average they're about 5'11", 6 foot, and on average weight they're about 90 pounds. Sometimes I roll with 200 pounds, 220. I am simply not the shortest, however I am the lightest basically in the group. So for me, I need to use more of my technique in order to survive against these guys. The guys, on the other hand, will also have to use technique because it's easy to use power. When you're heavier and you know that you're stronger, it's easy to utilize that against someone who is lighter. However, in order also to last long, the more power you use, then anaerobic meaning that this is the lack of oxygen, you need to use anaerobic in terms of jiu-jitsu. Actually, it's both. When to explode and when to learn how to breathe in order to last basically that long. Now, you cannot bench press. If you're bench pressing someone or you're using muscle, you're using a lot of power, at one point in time, you're going to get tired and you're going to lose. Trading the markets are also the same. You cannot fight against someone who is so powerful, so strong, that has a lot of energy. Mind you, according to Newtonian physics, energy cannot be created nor be destroyed. Why? Because energy is always going to be in motion. Trading the markets is pure energy. It cannot be created, it cannot be destroyed, it's infinite. So through the beginning of time, the only time that this is gonna basically stop or end when there's no more trading, or the end of the world basically. Other than that, it is in constant motion. It will go up and down. That creates frequencies. So that's based on a scientific perspective. So it's in energy and motion, and you're fighting that energy. That's why you need to know what the trend is. Trend is your friend. And if you're going against the trend, you're going to lose. If you're with the trend and you are buying at the right places with the lowest risk, then you have the higher probability because you're with the flow of energy of where price is at, right? So fear comes in place when you're in a negative flow. When you're in a negative flow and you're not in the same energy flow with the markets, this is simply maybe because of external factors based on your environment. Number one, maybe you didn't sleep properly, maybe you didn't eat right, maybe you didn't do your homework properly in terms of, when I say homework, the way how you analyzed it. Maybe someone triggered something, emotionally with you, and you're escaping basically from that perspective, and so you're using trading simply as a vehicle to fulfill in terms of what's lacking inside of you. Why? Because in most cases, trading is simply like a drug to others. It's because of the uncertainty. It goes up and down, that gives them simply that adrenaline. That adrenaline creates dopamine, and that dopamine creates that excitement, and then it creates that either it's like basically people are addicted to sex, people are addicted to um, alcohol, people are addicted to smoking, people are addicted to drugs, and so it creates that that feeling. It's simply that dopamine, or basically within the body, within the system. So it's a chemical reaction that gives them that sense of like, oh, it feels good. So when people have that adrenaline, and this is what trading does, they then now tend to forget in terms of their purpose of why they're trading. And what is that purpose? Purpose to be an active trader, not to be an addictive trader. The purpose is to make money consistently. However, but if you're also driven by perfectionism, then unfortunately, this is where you're going to create also a lot of lack of self-worth, because you're seeking perfectionism and you're no longer trading based on the purpose of making money. Um, yes, we cannot win all the time, but we have to accept that losing is part of the game. But as long as you can manage your losses, that even you have a 40% success rate, then that 40%, and if you manage that 60% of losses and you manage the 40% of your profits, then at the end of the month you should still be able to make basic money or be profitable by the end of the month. All right, so basically that's where the challenge is simply with the unknown. When you have uncertainty and a person are seeking the certainty, basically when you're seeking certainty from the uncertain events, then fear will come automatically as a result of it. And when fear happens, either you're sitting on the sidelines or you will fight it to buy or to sell based on this decision-making process that's been created through your logical mind. And then through there is simply following the process. Either you make money or you lose money. Now, if you're micromanaging the account, then that's a different story as well. That's now based on fear-based too. So, but if you have a lot of courage and you believe in the system, you believe in yourself to believe the system, and you're adaptable to certain situations, then definitely this is where you can make money to the upside or to the downside. Good traders are adaptable and they react to price, they really react to the markets. Excuse me. They're no longer basically trading based on perception. And mind you, when you're seeing something like this, and as long as you have cognitive bias simply is based on your own perception and what you think and what you see fit. And if you're in that state and you're being subjective, then no go. So to be objective is to see basically what the market is actually telling you, regardless of whatever asset class you're trading, whether it's the S&P, the VIX, the Dow, the dollar index, oil, gold, copper, basically treasury yield or bond or currencies. Then whatever you trade, a chart is a chart, price is price. And hence is why if you can fully understand that, you can fully understand who you are as an individual, then you will have a higher probability in terms of winning and the consistency to make money basically from trading. All right, do you have any questions that you would like to ask? And in the meantime, if you're typing your question here in the chat box, there is a really good book called Principles by Ray Dalio. Ray Dalio He is simply the owner of Bridgewater House. It's 160 billion, basically based on asset management. So he started off basically from his room, after college, and then through there he built basically his empire, and he's actually the biggest hedge fund out there, trading about $160 billion in asset management. Excuse me. So he wrote a book called Principles, and principles are simply what are your principles as a person, and that if you can abide by those principles, then you're more likely to be successful, regardless whether it be trading, business, or whatever career that you may have. Okay, so that's a real good book. Highly recommended to read the book Principles. All right, any questions? Great, I guess I explained it properly. So if you don't have any questions, as part of your homework, I would recommend to have some form of self-reflection. Self-reflection in terms of your performance this week. So 10 being the highest, 1 being the lowest. So if you had a performance of 9 or 10 out of 10, congratulations, then that means that you did the process correctly. However, if you said that your performance level is only a 5 or 6, then there's a deficit of 4 or a 5. And when you have a deficit of 4 or 5, the question is why? What is it? What were your challenges when it comes to trading? What were the emotions that you experienced this week? How can you be a better trader for the following week? How can you increase your performance from a 5 or 6 to an 8 or to a 9? By you finding those, and you can create a step-by-step process, then this is be part of your trading plan, not on top of your trading plan technically, because in my opinion your mental game will play a very big role. Plays about approximately 80 to, I'll make it say 98%. 1% is physical, 1% is technical, and the rest is simply being overrun by your mindset. So if you can create this certain process, then you would be able to have a higher probability in terms of performing the following week. And if you can find whatever weaknesses that you may have and you can work on those weaknesses, then even better. Okay, so that's your homework. And if you have any questions, please feel free to email me at traddictiv, Reynaldo at traddictiv.com. Once again, my name is Reynaldo, and you can email me at Reynaldo at traddictiv.com, and I'm more than happy to answer any of your questions. Likewise, you can also type your questions using the link www.tradewithufos.com/Reynaldo. Oh, hello, Koyo. Hello, it's a pleasure to meet you as well, Koyo. So do you have any questions, Koyo? Any questions? If none, Koyo, please make sure to email me there if you have anything. I hope you guys enjoyed this session. And in the next 15 minutes, please make sure to come back. Becky is going to discuss more about stocks. Going to go with the market update with the stock market. So, yeah, please hang in there. Thank you for coming along. In my opinion, you know, if you come in here and we get to know each other, and part of the group coaching component, I would be able to assist you more in terms of your consistency, whatever challenges you may have. Not just technically, but also mentally. All right, guys, thank you so much. Take care. Until next time, happy trading. Bye now.